Greetings all, this is Nishanth Reghunath welcoming you to the fourth part of our study in chapter 6A deductions under section 80C to 80U, and so far we were learning about all the deductions that's in respect of certain payments, and this part right here, that's a part 4 right here, is going to be the last part regarding the deductions regarding certain payments, and in this section we'll be learning about deductions from 80G to 80GGC. So let's proceed. You know the drill. I'll be giving you a summary of everything that we are going to learn in this part right now in a tabulature format. I suggest you to take it down in your notebooks or in your computers or PCs or wherever you are taking notes on. So let's check out the summary. So here are the sections. First of all, we have 80G. It's eligible for any kind of SCs. There is a quantum, there is a limit on the deduction, and it says 10% of ATI. ATI stands for adjusted total income in certain cases. And we have donation to national funds and charitable trusts happening in that section. So this section is regarding certain donations that we make, and that donations can be to national funds, charitable trusts, and there is a long list of items. You will learn it once we start the section. Then comes 80GG, that's regarding people who are paying rent but do not have HRA, as in they are employed assessees but they do not receive HRA and they are paying rent, or they can be self-employed people who are paying rent. So in short, individuals who are not receiving the HRA benefit. There is a limit on the deduction as well that we will deal in detail once we start learning about it. Then 80GGA, scientific research expenditure for assessees who do not have PGBP income. No limit for that. GGB and GGC are regarding donations that an assessee makes to political party or electoral trusts. Only difference being GGB is for Indian companies and GGC is for any other SC other than the Indian company. And one other difference being GGB, Indian companies can make a deposit or a donation to advertisement expenses for political parties, whereas individuals or other SSEs cannot. And again, no limits. Alright, so let's start with 80G. Donation to certain national funds and charitable institutions, and as always, first eligible SC, it can be anybody, any SC. And one condition, any donation exceeding rupees 2000 shall not be made in cash. Pretty clear, right? So now let's start with this section. The whole section of 80G is divided into 4 parts. Not 4 parts, 4 categories. So the parties to whom we are making donations have been categorized into 4. So there are 4 kinds of parties, and for each of those kind of parties the deduction available is different. So let's see how they appear. So we have 4 categories, 1 category, 2 category, 3rd category and 4th category. Alright, now let's see how the deductions appear. So first category, we can take 50% of whatever we donate as deduction. For 2nd and 3rd category, there is this thing called QA. QA stands for qualifying amount. So for 2nd category, we can take deduction of 50% of the qualifying amount. We learn about the calculation of qualifying amount in the coming slide. For 3rd category, we can take 100% deduction of the qualifying amount. And for 4th category, we can take 100% of whatever donation that we make. So for category 1 and 4, we can take straight away deduction. For 1, 50% of the total donation. For 4, 100% of the total donation. But for 2 and 3, it's based on the qualifying amounts. Alright, now let's see how we calculate qualifying amounts. The lower of A and B is actually what's going to be qualifying amount. Alright, so qualifying amount is the lower of either the actual donation under 2nd category plus actual donation under 3rd category. So lower of either this total or 10% of ATI. Alright, so qualifying amount is the lower of total of the donations that an assessee makes under category 2 and category 3 compared with 10% of ATI, and check which is lower, and that will be the qualifying amount. Now comes the question, what is ATI? We know what these 2 items are, and this is just the total of those 2 items. Now comes the question, what is adjusted total income? Let's see how we calculate adjusted total income. It's based on certain adjustments we make to gross total income. You remember this chart from our first part video, right? All the heads, we get aggregate. Club carry forward set off, we get gross total income. Now pause right there. Now it's from here we make the changes for calculating ATI. So from this gross total income, take out LTCG, take out STCG under 111A and take out deductions under chapter 6. But then there is something that you need to know here. We are calculating ATI for calculating 80G deduction, right? So there is absolutely no way that we can deduct 80G deduction here because we do not know what 80G deduction is going to be. So by deductions, what it means here is all the deductions from 80C to 80U except 80G. So take your gross total income, take out LTCG, take out STCG under 111A, and finally take out deductions from 80C to 80U except 80G. That is this section, and that will give you adjusted total income. Now take 10% of your adjusted total income, put it over here, compare with the actual donations that we have made in total for the second and third categories, take whichever is lower, and that will be your qualifying amount. And based on that qualifying amount, you can take deduction here. So first you give whatever amount that you have for category 3 and remaining balance you give for category 2. Alright, so that's how it works. So imagine you have 40,000 rupees as qualifying amount and 100% of donations made to category 3 is 35,000. So give 35,000 right away to category 3. Now we have 5,000 remaining for us, right? And actual donation we made to category 2, let it be like 15 or 20,000. Now that doesn't matter. What we will do is the balance of 5,000 that remains in our qualifying amount, we will take 50% of that and give 2,500 here. I hope you understood. If you did not understand, just point it out or just reach out to me. Just put it in the comment section. I'll put a video on that. It is a bit tricky, but then I'll give you an example post this video. So just give me a request for that and I'll do it. So that's it about ATI. Now let's see what are those 4 categories. Now what all items fill in those 4 categories. So first of all, in the first category, these are the items that come in. First one, any donation to Jawaharlal Nehru Memorial Fund. Second one, any donation to Indira Gandhi Memorial Trust. Third, Rajiv Gandhi Foundation. And finally, Prime Minister's Drought Relief Fund. So an easy way to remember the first category, that is a category which gives us straight away 50% deduction, is Jawaharlal Nehru and their family. So if his family. So if you see his name or any of his children's name or grandson's name, so his daughter's name, his grandson's name appearing in any of the questions or any of the items that you see in the question, right away remember it goes to the first category of 50% donation. Alright, and one additional thing is Prime Minister's Drought Relief. There are other Prime Minister funds, but remember drought relief will fall under section 1, category 1. Alright, now that's category 1. Let's check category 2. These are the items that appear in category 2. First of all, donations to public charitable trust. So charitable trust is what you need to remember, and that should be approved. Second one, any government authority, let it be local or in the central or state, whatever it is, a donation that we make to them for the purpose other than, for any purpose other than family planning. For family planning, it will fall under category 3. You will see it once we check out the list of items over here. Next, any government authority for the purpose of planning and development of towns. Alright. To a corporation for the promotion of interest of minority community. So, charitable purpose, development of towns, minority committee, and finally, temple, church, gurudwara, mosque, or any other place of worship for the purpose of renovation or repair. Got it? For the purpose of renovation or repair. So public charitable trust, other than family planning, towns and villages development, minority community development, and temple, church, gurudwara, mosque, or any other place of worship for the purpose of renovation or repair would fall under category 2. Now let's check category 3. So category 2 is the category wherein we get how much? 50% of deduction based on the qualifying amount. Alright. Let's check category 3. That is a category which we get 100% deduction based on qualifying amount. Just 2 items happening here. One is government or local authority for family planning. I told you right. Everything other than family planning to government or local authority will be falling over here. You'll only get 50% of qualifying amount. But for family planning, you'll get 100% deduction. And finally, things related to sports in India. So Indian Olympic Association or any approved association for promoting infrastructure of sports and games in India. So directly link. If anything regarding sports and games for the purpose of promoting the infrastructure in India and anything regarding family planning to government or local authority comes, it is category 3. Alright, so these are the first three categories, and moving on to the last category for which we get 100% of deduction of the amount that we donate. And let's see the items that fall here. There is a list of items here. One easy way to remember a majority of them is remember the word national. If the word national appears in any kind of item, then that will fall under the fourth category. So let's check first. So National Defense Fund, National Children's Fund, National Cultural Fund, National Sports Fund, National Illness Assistance Fund, National Foundation for Communal Harmony, National Welfare for Autism and Multiple Disabilities. So these 7 items will have this word national as a prefix. So if you see the word national, straight away category 4. Got it? Now the next set of items are going to be certain central government and state government initiatives or funds which we can easily identify based on their names. So Swachh Bharat, central government; Clean Ganga, central government; Central Welfare Fund, Army, Navy, Air Force, everything regarding central government; Prime Minister's National Relief Fund. Remember, Prime Minister's drought relief falls over here for 50% deduction. But then anything other than drought relief in the name of central, state or minister's name would fall under 100%. Chief Minister's Relief Fund. Any donation that we make to university or institution of national eminence. So certain universities are given the status of national eminence, any donation that we make to them. Any state-based relief funds. For example, a lot of disasters, natural calamities happened in the past few years, right? Flood in Kerala, Assam and a lot of places. So any kind of funds which are set for Umfan and all. So any kind of state government set relief funds for those disasters, it will fall over here. Zilla Saksharata Samiti, and finally State Government Fund for Medical Relief for Poor. So an easy way to remember the fourth category is any deduction, any item which starts with national and a set of items which are initiatives of the central government and state government or the Prime Minister's office, except for drought relief. Drought relief would fall here. So Jawaharlal Nehru, family and drought relief. Public charity, other than family planning, government expenditure, development of towns, minority interest, church, temple, gurudwaras and all. This is the most important to know here. Temple, church, gurudwara. That's the most common one which you will see in your questions in your examinations. Family planning and sports. National and central, state, prime minister. That's how you should remember it. Got it? So these are the 4 categories. 50% of actual amount, 50% of qualifying amount, 100% of qualifying amount, 100% of actual amount. Alright? Done? Now let's move on to the next section, that is section 80GG, deduction for rent paid. So let's check it out. So first of all, I said it, eligible assessee is an individual who pays house rent and he can be either self-employed or salaried but does not receive HRA. Alright, so party who's an individual pays house rent and does not receive HRA. That's an easy way to remember. And there is one condition for this section, and that condition is that the taxpayer, that is the assessee, the spouse, their minor child or an HUF in which he is a member should not own any residential house where the assessee resides or performs his duties from. Alright, pretty clear, nothing much to explain over there. Let's check what the deduction is. Deduction is going to be the least of 3 items. So first item, actual rent paid minus 10% of ATI. ATI is the exact same as we saw before, GTI minus LTCG, STCG and 111A and all deductions except the deduction concerned for which you are making calculations. So here it will be 80C to 80U except 80GG. Alright, 25% of ATI is the second one and finally 5,000 per month. Calculate all these 3, take the least and that will be your deduction. So ATI, as I explained previously, is GTI less LTCG less STCG less deductions under section 80C to 80U except for the concerned one, that is GG, and that will give you adjusted total income. Based on that, make these calculations and you'll get the amount of eligible deduction. So got it? So an individual who is paying rent and does not receive HRA. Alright. And his family, spouse, minor child and an HUF in which he is a member should not be owning any residential house where the assessee is residing. So that's it about 80GG. Now let's move on to the last 3 items, that is GGA, GGB and GGC. Let's check them out. 80GGA, donation for scientific research or rural development. So this deduction is concerned with certain donations that we make for scientific research or rural development to various authorities, various institutions or various universities. Let's check the section in detail now. So an assessee who is eligible for 80GGA needs to be one who has no PGBP income. So first of all, the eligible assessee is anyone, any kind of assessee with no PGBP income. Now there is a condition for this deduction, to claim this deduction. The condition is that the assessee shall not make any payments exceeding rupees 10,000 in cash. So in order to claim the deduction under 80GGA, donations exceeding rupees 10,000 is to be paid in any mode other than cash. Pretty clear. So if an assessee makes a donation of rupees 12,000 and if he has made that in cash, he or she has made that in cash, the assessee will not be able to take that deduction. So pretty simple. That's the only condition that is there for this section. Now let's check the parties to whom we can actually make the donation in order to claim the deduction under section 80GGA. So let's check who those parties are. So donation for scientific research or rural development can be made to 1. An approved research association, to an approved university or college, to scientific research institutions for the purpose of scientific research or rural development, and finally to National Urban Poverty Eradication Funds. So these are the 4 parties to whom we can make a donation and claim that donation as a deduction under section 80GGA. Alright. And unlike the previously learned section, for this section, the deduction, the quantum limit, there is nothing. Whatever the actual donation the assessee has made, and if he has satisfied the condition that any donation made above 10,000 is paid in cash, he or she can take complete deduction of the amount that has been paid. Got it? So deduction is the actual donation amount and there is absolutely no limit to the amount here. So that's it about 80GGA. Let's move on to the last 2 sections under this part, and they are 80GGB and 80GGC. So I'll be teaching them together since they are pretty much similar. So 80GGB and 80GGC are regarding donations made to political parties or electoral trusts, plus any advertisement expenditures made on behalf of the political parties in their souvenirs or brochures. So the only difference in 80GGB and 80GGC is the fact that to whom it is applicable. So I've made a table and I've done a comparative study which will make it much more easy for you to understand the topic. So let's check the table out. So first column particulars, second column 80GGB, and finally the third column 80GGC. So eligible assessee for GGB, it needs to be an Indian company. For GGC, others except local authority. So any assessee other than an Indian company except local authority can claim deduction under 80GGC. Next one, mode of payment. So regardless of the amount being paid, whatever amount is being donated to a political party or an electoral trust or whatever that is applicable under section, the assessee has to ensure that the complete amount has been paid in any mode other than cash. Fine. Now let's check the items that are allowed in 80GGB and 80GGC for making donation and claiming the deduction. First of all, donation to a registered political party. So this registered is key here. Okay. Registered political party. GGB, GGC, both are allowed. In both the sections it's allowed. Second, donation to electoral trust. In both the sections it's allowed. So the first part, political party, electoral trust, allowed in both. Only difference happens in the advertisement expenditure. So advertisement expenditure in souvenir or brochure of the registered political party is only allowed for 80GGB. That is the Indian company. For individuals or other assessees except local authority, they cannot take deduction for a donation made to a political party for the purpose of advertisement expenditure in souvenir or brochures. But Indian companies can take that deduction. So with this comparative study, I have summed up everything that's crucial for both these sections, and I hope that you guys understood what I just said. And if at all you have any doubts, please reach out to me. You can either comment on my videos or drop a comment in the comment section, or reach out to me in my email ID or my WhatsApp contact, which I have given, the details of which I have given in the description. So to quickly summarize what we learned in this part, we started off with 80G. 80G was donation to various parties, national funds and charitable trusts and all. We saw there are 4 categories of parties over there, and for 4 categories the donation amount qualifying as deduction is different. So for category 1 we learned that 50% of donations made can be claimed as deduction, and category 1 was regarding what kind of parties? Yeah, Jawaharlal Nehru, his family and Prime Minister's Drought Relief Fund. For category 2 and 3 we saw that we need to calculate the qualifying amounts. For category 2 we are eligible to take deduction of 50% of the qualifying amount, whereas for category 3 we are eligible, the SSC is eligible to take deduction of 100% of the qualifying amount, and for category 4 finally we can take 100% deduction of the amount that we actually donate. Now category 2 was regarding various charitable trusts, government and local authorities for anything but family planning, for development of rural areas, for protection of minorities, things like that. Category 3 was regarding government or local authorities for the purpose of family planning, and the Sports Association, Indian Olympic Association, for the purpose of improving the infrastructure in our company for improving the conditions of sports. And finally category 4 was regarding lot of national funds. We saw a lot of funds with the word national as a prefix and quite some other stuff which were concerned with the central government, state government or the Prime Minister's office, except for drought relief, because drought relief would fall under category 1. So an easy way to remember is that method. Now that was 80G, and after 80G we saw 80GG. 80GG was nothing but donation in respect of rent paid for an SSC who does not receive HRA despite being a salaried person, or for someone who's self-employed. And we saw a condition that none of his family members, as a spouse or minor children, should be owning a house where he is residing, or the HUF in which he is a member should not be owning a house where he is residing. And the deduction amount came as 3 parts, lower of 3 items. So I hope you remember all those 3. The first one was actual rent paid minus 10% of ATI, adjusted total income. Second one was 25% of adjusted total income, and finally third one was 5,000 per month. So calculate these 3 items and take the lowest of them all, and that will be the qualifying amount for deduction. And after 80GG we saw 80GGA, and that was donation to scientific research or rural development, and it can be made by any SC who does not have PGBP income, and any donation exceeding rupees 10,000 has to be made in any mode other than cash, and there is no limit to the amount which can be deducted. And finally we came to 80GGB and GGC. I'm not repeating what I said here, but one thing that I left out is the fact that the deduction available is the actual amount donated. There is no limit here as well. So with this we have come to the end of all the donations in respect of certain payments. Alright, so heading B we are done with. Now we are moving on to donations in respect of certain incomes. So see you in that video. That is part number 5, which will be regarding donations in respect of certain incomes received by the SSC. So see you there. Till then, take care, stay safe and study well for your upcoming exams. Bye.